My name is Mark Fisher, and I'd like to say a few words about how finance councils can help pastors avoid a common problem. The problem is this: pastors are often confronted by parishioners or staff members who request extra money for their particular ministry. The pastor acknowledges that their ministry is certainly important. What ministry isn't? Every pastor finds it difficult to turn down a financial request for ministry, even when he knows that increased spending in one area may mean a shortfall in another area. Finance councils can help pastors solve this problem by advising them about the parish budget. The budget is the annual cost in dollars of the parish's ministry. Creating that budget is a pastoral decision. Every parish accepts money in contributions. From among the many ways that a parish could choose to spend its money, pastors have to decide to spend it on what is essential to the church's mission. Finance councils can help them make wise decisions about the budget. In this presentation, I'll be talking about the two main jobs of budgeting. First, estimating the income, and second, deciding how to spend it. The first challenge to the Finance Council in creating the budget is to estimate the parish's income. No one can say for certain what the parish income will be from year to year. Yet, without a reliable estimate of it, the council will not know how much can be allocated to parish expenses. For example, can the parish afford to hire a youth minister? Can it afford to purchase new hymnals? Can it replace the roof? All of this depends on the parish's income. The closer the estimate comes to the actual income, the better the parish can plan. How does a finance council help the pastor estimate the income? Well, it helps by studying the records of past giving. A well-run parish keeps detailed records of the contributions it receives. For example, it records the date on which people contributed. That way, a parish can distinguish between the times such as Christmas and Easter, when people are most generous, and Sundays in ordinary time, when contributions are lower. Well-run parishes also record the purposes for which people give. Were their contributions unrestricted, or were they restricted to a specific purpose, such as a building fund? Did people contribute for particular services they received, such as weddings or funerals? Did the parish receive income from fundraising events or from the rental of property? These are questions for which finance councils want answers. By studying parish records over several years, the Finance Council can see patterns of giving in the past and begin to predict future patterns. Ultimately, the Finance Council should recommend to the pastor a precise number, an estimate of next year's income. Once that estimate is complete, then the work of tailoring expenses to fit the income can begin. Once the pastor has settled on a specific income estimate, he can ask the council to help him allocate the anticipated income. This process usually begins in January and extends for 5 months so that the new budget is ready to go into effect on July 1. The new budget will guide parish expenditures for the next fiscal year. In deciding how to allocate the parish's income, the pastor will consult parish employees as well as the Finance Council. Most employees know a little about parish expenditures, and the parish accountant or business manager knows a lot. The goal of the consultation is a budget that, while it might not be what everybody wants, fairly reflects the parish's mission. Parish expenditures reflect parish values. As in estimating income, the estimate of expenses starts with the parish's recent history. Finance councils will want to begin with the big picture, namely how the pie of the parish expense has been sliced. It is customary to divide expenses into 5 categories. There's employee compensation, fixed expenses, operating expenses, discretionary or program expenses, and capital expenses. The Finance Council will begin by examining the previous year's expenses in each category to see what percentage of the parish budget goes to each category. The pastor who wants a realistic and responsible budget can benefit from consulting the Finance Council. It can help by studying the previous year's expense records, by analyzing them, and by suggesting adjustments for the next year. Maybe the parish should decrease expenses in one area and increase expenses in another. Such changes are not just financial, they're pastoral. They can help the parish be faithful to its mission. After the Finance Council has recommended a new budget and the pastor has adopted it, the council's work is not over. The pastor may want to ask the council to monitor the budget and to advise him about how to reconcile discrepancies between income and expense. For example, weekly income may not be keeping up with estimates. If the estimates were overly optimistic, then the parish will not be able to spend what it hoped to spend. The council can help the pastor to see the relationship between the hoped-for income and the actual income. If parish income is less than anticipated, councils may suggest how to reduce planned expenditures. This is known as justification, the process of justifying or equalizing income and expenses. For example, if income is down by 5%, it never makes sense to simply propose a 5% across-the-board budget reduction. This could demoralize employees, and many expenses, for example, the so-called fixed expenses such as insurance premiums and taxes, can't be reduced. The council can help the pastor by proposing ways to resolve budget discrepancies that will not greatly harm the parish's mission. All of this will help the pastor solve the problem that we began with. It was the problem that pastors face when parishioners or staff members make unexpected financial requests for the ministries. Pastors know that these ministries are important, so how should they respond to such requests? A pastor whose finance council has helped prepare the budget knows just what to say. He will tell the parishioner or parish staff member that the parish had a lengthy and thorough process to create a budget. During the process, they carefully estimated the parish's income. They carefully allocated expenses in categories. Those categories represent a commitment to the parish's mission. If the pastor altered the parish budget without further consultation, he might be jeopardizing the mission. I think that's a good answer. Is that what your finance council enables your pastor to say?